Welcome back to Inner Circle Precision. In this video, you're going to learn about an H4 fair value gap and an M15 entry. Basically, a fair value gap is a gap that is issued between two candles that are fast-paced, and this shows price imbalance which is later going to be filled. So H4 is a higher time frame, and when an FVG is formed, it tells us of huge price imbalance that needs to be filled later. Definitely, the market will try to fill this and then probably continue with its initial trend. This is the starting point where we need to locate H4 impulses that have exhibited fair value gaps. So all that you need to do is to look for impulses on the H4 time frame, and within those impulses, you need to look for these fair value gaps like this one showed here. Our anticipation will be to see these gaps to be filled before moving to the next step. So basically, this is an H4 snippet, and in this particular H4 snippet, we can see the market going to the downside. As it is going to the downside, we can see it creating this particular small fair value gap that was issued. And the market actually went to the downside but came back to fill that price imbalance, and then it continued to go to the downside like that. So this is basically the first step to locate these fair value gaps before we move over to the next step. So basically the next step is now to switch to the M15 time frame. We've seen that in this particular instance, this is the H4 fair value gap that we've seen on impulses that has been issued on H4, and then we switch to the M15 where we now start to look for a fair value gap on the smaller time frame, which is basically the M15 time frame. So basically we can see from the H4 the move was issued, and then whilst it was issued, a fair value gap was created on the M15 time frame. On this particular M15 time frame, the market went back to fill in that particular. You can see a retest here, which you could have made entry and stop loss right above the fair value gap. That same particular price was retested again here, and then the market went down with a very fast move where it actually gapped. So here's the strategy definition of how you are going to be trading this particular strategy. 1. Look for a fair value gap on H4 time frame impulses. This should be in a directional trend. Don't just look for a fair value gap, but try to find the market structure. Is it bullish or is it bearish? Mark the fair value gap and wait for the market to pull back into that fair value gap. Wait for the M15 time frame to issue an impulse, and then look for a fair value gap or away from the H4 fair value gap that you have issued. Enter when the market pull back to the M15 fair value gap, and do not forget to calculate your lot size so that you won't risk something that you are not prepared for. On that note, we've come to the end of this video. Join our free Telegram channel. I'll leave the link in the description box below.